So far, the ECB has not overtied. 4% for the deposit facility rate seems to be okay. We see that monetary policy is already in restrictive territory, is dampening demand. But that seems to be enough to bring down demand and bring inflation back to 2%. So rate cuts are definitively on the agenda for 2024, but probably late in 2024, not as soon as the markets are currently expecting.
Now, the ECB have regularly referenced the fact that wage pressures, profit margins, and expanded profit margins are the reason that inflation has been so sticky. How do you see those metrics developing into 2024, both on wage and on profit margins?
Yeah, that would be crucial for the ECB next year. Indeed, we see that labor costs have soared now 6% in Q3 for unit labor costs. That's extremely high, and also we see that the decline in productivity is fueling this higher labor costs. So fueling definitively inflation. Domestic inflation is far above headline inflation right now, and that's what matters for the ECB. Companies will have a trade-off to face next year. So either they try to maintain their profit margin by increasing selling price, that is inflation. That would mean that the ECB will have maybe to do more, or at least not cut early. Or companies may start laying off people to maintain their profit margins. That would mean not more inflation, but probably a deeper recession and de facto the need for the ECB to cut earlier. So that definitively the resilience of the labor market, the shape of the labor market will be key for monetary policy next year.
Do you have a view on when the ECB will begin their cutting cycle?
Yes, of course, we have a few. We don't see the ECB started to cutting rates before June next year. There is no reason to hurry up on rate cuts for the ECB. As I said, domestic inflation is very high. Service inflation is at 4%. Food inflation is close to 7%. That's far too much for the ECB. That's the reason why it will wait, probably until mid-year.
What are you looking out for most closely going into 2024? Where do you think the potential surprises could come from?
Definitively the labor market. So we monitor very closely the wage settlements that are still happening. That will happen further next year. For now, we have 5% wage growth. It's no more accelerating. That's good news for the ECB. But wage settlements, wage setting is definitely one aspect we monitor closely. The other one are job openings. We are still at very high level. We see that the job openings are edging down, but they are still very high by historical standard. 2.9% in Q3. That's extremely high.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.